What's up, y'all boys? I'll be going over price action on December 19th. And so basically, to start off, we have this imbalance here. This right here, we have two fair value gaps, huge fair value gaps. This whole black candle to the downside on the 4 hour. This whole down movement was FOMC yesterday, December 18th. So we see right here, we have this previous imbalance here that we still haven't, filled in completely. However, after this FOMC 4 hour candle, we see this imbalance, or sorry, this BPR form. So we have this whole BPR, and that's one big area that we're looking into. So when we scale down to the 15-minute, I'm hanging out around like right here, correct? And so I'm thinking, all right, bro, we basically closed above or sorry, no. We created these two fair value gaps in the market right here on the 15-minute. So I'm thinking, if price doesn't close below this right here, I'm thinking we will probably get a retrace into this fair value gap that we have right here. And so I'm hanging out, like I said, I'm hanging out around up here. And so we're up here. We don't tap into this necessarily. And then we start to see a retrace starting to form into these fair value gaps. So I'm obviously waiting for us to get some sort of confirmation. So if we go 8:15 on the 5-minute. So 8:15 on the 5-minute, we see this whole retrace starting to form. And finally, we see that we tap into this right here, and then we get buying pressure out of it. Ultimately closing on this 5-minute candle above this fair value gap here. And so what we see is we get our 5-minute retrace to the downside right here. And then at 9:15, we're looking for a break of structure back to the upside. So at 9:15, we're looking for a break of structure back to the upside. So around right here, we finally get a break of structure off of this candle. And so if we were to do that, long position, so off of this candle, closure right here, break of structure. And so this would have been a really bad risk to reward. Targeting, obviously, it would have probably been targeting 15-minute liquidity. And so this is not necessarily a trade that I would have encouraged anyone taking, but it was a possibility. It would have been horrible, guys. But essentially, we did tap right into this fair value gap, which we did expect price to retrace back into. I mean, that was basically our highest confluence, was the fact that we were expecting price to retrace into here, and as soon as it retraces, price basically plummets to the downside, which honestly I was not expecting. I was honestly bullish for the day. At least I was bullish, thinking that price would retrace into more of this equilibrium of the whole imbalance that we got yesterday. I was honestly expecting us to get a retracement back into this. However, we do have this 4-hour imbalance that we're still yet to fill down here. However, I don't think that I was not expecting price to come all the way down here. I was honestly expecting us to possibly get a retracement, a bit more of a retracement to the upside here before we continue downwards. And honestly, the one thing I can attribute price to continuing downwards after we reach this fair value gap is the fact that we were bearish to begin with on the 4-hour. We were bullish, however, on the 1-hour, so that basically just tells us that higher time frames hold higher power, and the fact that if we're bullish on the 1-hour and we're bearish on the 4-hour, that's probably just a 4-hour retracement. So we can't expect price to continue upwards forever if we are technically bearish on the 4-hour. It wouldn't be ideal to take a long-term long play if we are bearish on the 4-hour. So I think that what we did was correct, knowing that we were probably going to retrace into this fair value gap on the 15-minute. In the fact that we would have taken profit right here, and then honestly, risk to reward ratio would have absolutely sucked. We could have put our take profits stop loss below this fair value gap right here. So if we were to have entered right here, we could have put it below this fair value gap right here. And so that would have been horrible risk to reward. But yeah, I mean, I guess we're still in some pretty shitty price action from the FOMC announcements that we had yesterday, cutting interest rates. So I guess today wouldn't be an ideal situation to trade. I guess probably, I mean, tomorrow is a no news day, I'm pretty sure. So that might be more of a favorable condition to trade in. But yeah, boys, that's basically it for me today. No SMTs really. I didn't see any SMTs forming. So this basically would have been, the retracement into the fair value gap would have been the only thing that I could attribute this win to, the fact that we expect the price to retrace back into it. So yeah, boys, that's basically it for me. I will probably be trading tomorrow since I'm done with midterms, and just depending on what price action is like. I also think it's a no news day, so like I said, based on how price action is, we'll see. But I'll probably be uploading a pre-market bias also. But yeah, boys, I'll see you guys in the next one.